Imagine if a person, almost 300 years ago, without computers, without indicators, without news, earned immense wealth from the market simply by reading human psychology. How dangerous would such a mindset be? Today, most traders stare at charts, yet the market breaks them every single day. Why? Because they repeat the same mistake again and again. They try to understand the market, but never themselves. Selling in fear, buying in greed, holding losses in hope. This psychology alone pushes 90% of traders out of the market. But the real question is the market truly random, or is every move driven by the human mind? Today, we are explaining a book that, if you listen carefully, may completely change the way you think about trading. This book is based on Honma Muneshisa, a man the world now knows as the god of trading. The candlestick charts you see on every trader's screen today, he created them. The author, Lee Honggi-do, uncovered Honma's hidden thinking, his psychology, and the rules that still work today exactly as they did centuries ago. From this book, we have extracted 10 extremely powerful trading rules, and I say this with confidence. After hearing them, you'll say, "I wish I had known this earlier." So listen carefully, because this is not just a book, it's a story that can change a trader's mindset. Now, let's begin with Honma's rules. Rule 1. The market looks right at the wrong time. Honma's first rule does not tell you to read charts or control emotions. It is far more dangerous. The market always looks right at the wrong time. When the market is rising, every candle is green, news is positive, profits are everywhere. Your mind says it will definitely go higher, and at that exact moment, the market turns. This is not coincidence, it's a psychological trap. The market looks safest when it is most dangerous. When everything feels finished, a new game starts. Honma didn't trade against the crowd. He stayed with the crowd, but never thought like it. Candles were not price to him. They were records of human emotion. Extreme thinking creates reversals. Most traders don't lose at the wrong place. They lose with the wrong mindset at the right place. Rule 2. Markets move after impact, not after news. Markets don't change when news arrives. They change when its impact is over. If news alone made money, newsreaders would be the richest people alive. Markets move on expectations, not headlines. News is only an excuse. When expectations peak, strength fades. When fear exhausts itself, reversals begin. Markets don't turn in noise, they turn in silence. Rule 3. Losses happen because you want to be right. You don't lose because you're wrong, you lose because you want to prove you're right. Ego blocks listening, hope replaces stop-loss. The market punishes ego, not ignorance. Honma never married ideas. Every trade was only a probability. If proven wrong, he exited. No anger, no revenge, no debate. Most traders sacrifice money to protect their opinions. Honma always chose wealth over ego. Rule 4. The market is most honest when it does nothing. Markets hurt people more through waiting than movement. Silence is preparation. Overtrading happens when nothing happens. Honma considered no trade a strong position. Boredom is the market testing discipline. Rule 5. The first move is often a lie.
The market's first move is a test, not truth. The first move measures reaction. The second move reveals intention. Breakouts trap impatience. Real moves reward patience. Wrong timing, not wrong direction, destroys traders. Rule 6. Slow markets build the biggest power. Fast moves attract attention. Slow moves build wealth. When markets move slowly, they build weight, not direction. Professionals work where there's no emotion. If a market bores you, it's trying to remove you. Patience is the real edge. Rule 7. The fear of being late is more dangerous than fear. The most dangerous emotion isn't fear, it's "I missed it." Regret pushes bad decisions. Trends end when satisfaction appears, not regret. Big moves leave empty space. That space is the real opportunity. Correct timing feels calm, not urgent. Rule 8. When trading feels easy, you're most vulnerable. Ease breeds carelessness. Markets don't destroy confidence violently. They slowly soften it. When trades feel effortless, discipline weakens. Honma tightened rules during easy phases. Ease is a warning, not a reward. Rule 9. The market is purest without emotion. The market is most honest when it creates no feeling at all. No excitement, no fear, no drama. Professionals operate in silence. The best trades feel boring, calm, stable. Emotionless markets follow structure, not crowds. Rule 10. The greatest loss is losing the trader within you. Trading isn't about beating the market. It's about surviving with yourself intact. Mental exhaustion breaks traders, not lack of strategy. If trading empties you, stop. Your worth is not your P&L. Honma traded for freedom, not money. The market was his art, not his identity. These rules may or may not make you rich, but if you truly understand them, you will never become a slave to the market. That is the true legacy of the god of trading. If even one rule shook your thinking, like the video. Subscribe for deeper trading psychology, and comment which rule hit you the hardest. Share this with a trader who's lost, confused, or doubting themselves, because this might be the turning point they need.
Rule 11. Noise versus signal. The market shouts to distract you. The first move is rarely the real move. The patient trader sees the truth in silence. Rule 12. Patience beats luck. Rushing into trades is a trap. Waiting for the perfect setup is your real advantage. Fast traders lose small. Patient traders win big. Rule 13. Psychology over charts. Charts don't lie, but emotions drive the market. Read the crowd's fear, greed, and hope before reading the price. Rule 14. Fear exhaustion. Markets turn not at peak fear, but when fear finally fades. Most traders enter too early and get trapped. Rule 15.
Easy markets are dangerous. When everything seems smooth and predictable, the market is testing you. Easy profits are illusions. The real gains hide in subtle setups. Rule 16. Patience in calm markets. The market rarely rewards panic. When the price moves slowly, watch closely. This is when real power is building. Quick traders get shaken. Patient traders get rich. Rule 17. Follow structure, not crowd. Most traders mimic others. Professionals study structure. Don't trade what you see everyone doing. Trade what the market quietly reveals. Rule 18. First move tests, second move rewards. The market's first move measures your reaction. The second move rewards those who waited. Jump too early and you fund the patient traders. Rule 19. Ego kills trades. Wanting to be right is the fastest way to lose. The market punishes ego, not mistakes. Trade possibilities, not proofs. Rule 20. Trading is a marathon, not a sprint. Losing energy, curiosity, or discipline is costlier than losing money. Markets will always wait, but can you wait for yourself? Subscribe. Subscribe to trade like Honma, not like the crowd. Trade like Honma, not like the crowd. Like. Like if this rule sharpened your mind for the market. Comment. Comment which rule will change your trading the most.